Hello, ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Kickstart video. In the Kickstart video, I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar from a technical perspective. So let's get started. Let's look at the euro versus US dollar on the hourly chart and trading. Yesterday we had ups and downs, and the price approached this bottom channel trend line. Did find early buyers against that level, but we did and then move back above the 38.2% retracement. That's of the August move from the August low to the August high. You can't see the low, but believe me, it's back here. But you can see the price moved below the 38.2 here, and again here before rotating back to the upside. And trading here today, the low prices so far have been able to hold that 38.2% retracement after moving up to this topside channel trend line, which is really parallel to this line right through here. So we had this trend line forming the bottom side, and then we had this top side trend line above here. Also near the high was the falling 100-hour moving average. So a couple of reasons why sellers leaned against that level, and we forced the price back to the downside, back to the 38.2% retracement. So now we have this battle going on between the trend line, the 100-hour moving average up here, the 38.2% retracement right here. We're trading it even between those levels right here. So the market keep an eye out the 110.61 for a break to the upside. On the downside, keep an eye on the 38.2% retracement for a potential break to the downside. Although sellers did have their shot yesterday, we'll see if a new shot here today is fired and hits. So be aware of that at again 110.39. Let's take a look at the dollar versus yen next, and again we'll focus on the hourly chart. And what we've seen in this currency pair is yesterday the price started its move back to the downside. We did find support near, we went a little bit below the 200-hour moving average here after breaking below the 50% retracement of the August trading range and the 100-hour moving average near the 53 level right here. But again, rebound by the close, market moved back above those levels, including the 50% and 100-hour moving average. But in trading here today, actually not by the close. The close looked like it was a little bit below those levels. In trading here today, the 50% retracement did hold a resistance right here in the Asia Pacific session and moved back below the 200-hour moving average. But the 61.8% retracement seems to be holding support down here, and we're trading a little bit above and below the 200-hour moving average. So the market is kind of figuring out, trying to figure out which way it wants to go. Doesn't want to run to the upside, in which case we need to get above the 100-hour moving average and stay above that moving average. That seems to be the one that we need to get to and through. On the downside, however, I could say that the bias remains a little bit more to the downside because we're below the 50% of the August trading range. We're just below the 200-hour moving average. So the sellers are trying to make a play. We'll see if they can keep that play going or give us more confirmation as a break below 61.8% retracement. That's of this August trading range right through here. If we're able to stable that level, that would be more bearish. Note that on Friday of last week, the low price in the Asia Pacific session did hold that 61.8% retracement. So there is some history with that level. So watch that at 144.62. The sterling versus US dollar next, the hourly chart. Again, we have been lower here for a number. Well, it's 1 day right there, 2 days right there, 3 days right there. In Monday, the market did correct higher, but yesterday we moved lower. In trading today, the market is trying to move a little bit higher as well. So two of the last 3 trading days are trying to rebound to the upside, but the shorter term trend is more in this direction, at least for now. The 100-hour moving average on the top side will remain a key resistance level. Also, this swing area between 131.28 and 131.47 is an area of importance. We found, at least in the short term, again, we found willing sellers through that level through here, and then came down toward this level right here and trade. A number of different times of the market either found support or resistance near these levels, including trading yesterday, where you can pretty much say the high prices stalled near the 44.7 level. So get above the 100, get above the 44.7 level, opens the door, and then we'll have to deal with the 200-hour moving average. But right now, the shorter term trend is more to the downside. Watch this level. If we move lower, we'll look toward the rising 100-bar moving average on the 4-hour chart. And then ultimately, if the sellers are really mean business, We need to get below the 38.2% retracement of this move to the upside. That level comes in 130.36. As most people know, if we get a big trend move to the upside like we did in the month of August, I like to see the price move back below 38.2% retracement. If we can't do that, then it's not, the sellers are not showing their strength in trading. So finally, let's take a look at the dollar versus Canada. This is special. Why special? Because we have a Bank of Canada rate decision. Adam is says that there's about a 50-50 chance of a 25 basis or 50 basis point hike, which is higher than what the market is expecting. And what is the key level should that happen on the top side is the bottom of this red box. Remember this red box going back to this area right through here. It incorporates a number of different swing lows through here, near here. We did in a trade a couple weeks ago. This is a 4-hour chart. We fell below that level, above and below that level before finally finding sellers pushing the price to the downside. Now we're correcting back higher and looking back toward that level. So if the Bank of Canada does cut rates, that should weaken the Canadian dollar against the U.S. dollar, send the dollar higher, U.S. dollar higher, U.S. dollar versus Canada higher. And we need to get back in this red box, back above also the 200-day moving average and the 100-bar moving average in the 4-hour chart, which is near that area around the 135.90-ish type level. This is 81 to 88 of those moving averages. Get above the 90 level gets us back within this box. So pay attention to that going forward. If the Bank of Canada cuts 25 basis points, we could see a rotation back to the downside as the focus next turns to the jobs report on Friday in the U.S., which could give the Fed a choice of whether they want to do 50 basis points at their September 18th meeting if it's weaker than expectation. So that's my look at 3 of the major currency pairs, plus a bonus look at the dollar versus Canada. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.